Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. It is the 10th of October, 2022. I'm Brendan Campbell. I'm here with Steve Gagel. Today we're going to talk to you about director's duties. I think we're calling it my duties as a director, but it's really a bit of a deep dive as to look at, well, we got clients who are directors of companies. Are they the same as a director as a BHP, of Telstra, of those sort of things? And Steve Gagel is one of our directors, sits on a few boards here at Prosperity, sits on external boards as well, AICD accredited, etc. So we'll know all about these sort of things. So Steve, thanks for joining us and welcome to the podcast.
Thank you.
Steve, talk short. BHP, they've got some directors. Prosperity, we've got some directors. Our clients, mum and dad's running a small business, they're sometimes a director. What's the difference?
Well, with the eyes of the law, basically nothing. So the responsibilities that any director carries is the same, irrespective of whether you're one of the big ASX listed companies or just running a mum and dad operation.
And those laws, I guess, your responsibility, you might be the same, so you're effectively the same, but you're reporting to different groups. I guess BHP is reporting to the shareholders, management, the government in some ways, any other interested parties. Mum and dad's small business potentially isn't. Is that kind of the difference then? It's they might have the same responsibilities, but different people they report to?
Yeah, exactly. So there's only probably two external reporting provisions that ASX listed companies have to comply with that most others don't. But yeah, all in all, 90% of the duties are exactly the same.
Well, let's go through some of those duties. What's your responsibilities, good and or bad? Probably the negative is what we're looking at, unfortunately, to keep a podcast interesting, but it's probably negative, a lot of it. Yeah,
well, really the main concept that people have to get their mind around is that being a director, you're really separated from management. So a board's basically there to basically push through with a strategy and to sort of develop the culture of the business. The CEO's head of management and all management of the business should run through the CEO and the management, not the board. So the people just have to make sure that in running their own companies that they still sort of keep these concepts in the back of the mind, because that's the way the law ultimately works.
And I guess in a lot of the time, the board there may not be a board, there may not be a CEO, and it might be just XYZ and WTS running this thing or whoever it is, but you might be all in those same people. But as you expand, I guess, and get bigger, if you bring in levels of management, if you bring in external parties to help with, the governance and the board side of it, and get advisors helping you, I guess the same, what do you say, it expands and gets bigger, but your responsibilities as a director still remain the same, even if you're a smaller company compared to a bigger company like a BHP.
Yeah, correct. So even some of our small businesses who sort of grow, the sort of limit to start thinking about external boards and external help is probably about 5 million in turnover. Yeah. And definitely when you hit 20 million in turnover, things are just getting too big to handle, and the downside starts to become more and more important for a board of directors.
And often that board of directors isn't just that board you're getting in to assist isn't necessarily a formalized board. Often it's your accountant and your lawyer that you ring up every month or two and just want to run a couple of things past. And sometimes it's just formalizing that and putting it in place where, hey, you guys are effectively a board for me, and we meet and chat about it. I guess that's how it starts to grow. But then when you, as I say, you're bigger, 20 million turnover, well, you really should have a structured meeting with a board to talk about strategy and culture, etc., who then set the direction for CEO, blah, blah, blah. And then from there, is that sort of where you're getting it?
Yeah, not only the board, but also the upper management. So definitely a chief financial officer should be probably considered when you're starting to hit those levels, just to make sure you've got the right people looking after the right things in the business.
And that's great from a big business, but even the smaller businesses, you're running a small, I refer to mum and dad company, etc., whatever it is, but even a small one has that same responsibility. So what are those big, scary, responsibilities that you as a director are still required to meet? Because if you're employing staff, there's one I know flags straight away to me is, well, there's some, not issues, but there's some responsibility there that the directors should be aware of. Let's talk through a couple of those basic concepts, I guess, of a director.
So sort of basic concepts. The sort of the first one from case laws to act in good faith. So that just means that you're acting in the best interest of the company at all time. You're acting for proper purpose. So you're not sort of grinding your act on the side, and you avoid any conflicts of interest. Then you've got a duty of care and diligence. So you can't just have blind acceptance on things that are presented to you. It's a sort of nose in, fingers out concept where you have to prod and know what's happening, but
nose in, fingers out. What does that mean?
Well, nose in, fingers out basically means you need to stick your nose into the business and the happenings of the business.
And keep your fingers out. I get it.
You need to keep your fingers out of the management. So you can't overstep your mark and be a director also, and let basically the management team run the business.
Yep.
And then the biggest thing that's enshrined in corporate law is you have to prevent insolvent trading. So that's one of the big things that you sign off every year, and every company in Australia has to sign off that you're solvent at the end of the year. And this is basically the requirement from corporations law that you can't trade whilst insolvent.
Yeah, and no matter how big your company is, you should be getting one of those every year, a little document with your ASIC renewal sort of stuff where you're signing and say, yep, my business can meet and pay its debts as and when due, et cetera, et cetera. What are the risks in that? Yeah, obviously they should be, absolutely, and you should be signing that in good faith and doing it correctly. But if someone's maybe doubts that and they're trying to sign something, what are the risks? What happens?
Well, the risks are that the company that was carrying these liabilities, you become personally liable as a director for those company debts. So
which debts in particular? All of the debts are you responsible for, or?
Yeah, all the debts once you become insolvent. So there's a lot of various definitions of insolvency. Probably the first one is that you can't pay your debts when they fall due. So as soon as that starts happening, you have to start asking the question. There are government, essentially employee obligations that the government has strengthened to make sure employees get their pays. That includes payment, leave provisions, superannuation, and also GST. So a director in charge of an insolvent company can be held personally liable for all and every one of those items.
So that, the wages, the super, GST, etc., probably in that order almost. But there are, if you're trading insolvent, but if you're trading solvent, you should be fine on that, and there's enough to pay its debts as and when due. I think, am I right in saying the biggest problems really come when someone tries to push the boundary, they know they're in trouble, they just try and keep the company going for an extra 6 months when they shouldn't have, and they should have put their hand up and said, actually, we can't pay our debts, this is in trouble, we need to take some steps here. Would that be talk to, someone about insolvency, or talk to someone about managing those debts? But I feel that's a step that some people don't want to admit that their business can't handle its debts, and all of a sudden they try to trade insolvent, and then that's when these problems start. Is that fair to say that?
Yeah, 100%. So really, the first time you feel that there's a bit of pressure, you should be putting your hand up and talking to someone. There are various things that you have to and you're compliant to do with, but if you don't do those, then you take on that personal responsibility. So number one to try and avoid that is to basically put your hand up and talk to someone like your advisors at Prosperity.
Yeah, nice plug. Thanks, Steve. Good one. So yeah, that's the biggest issue. But I guess if you think you are insolvent, or you are solvent, I should say, you're signing those things in good faith, you're doing all the right things. At the end of the day, certain debts you could be responsible for. You've mentioned, wages, super, those sort of things that the HO will likely come after you. And I think they issue a director's notice and those sort of things. So in particular, if you ever get a director's notice, that's really important. So you might be involved in the day-to-day running of the business, but then you might get a director's notice going, hey, you haven't paid your wages, or you haven't paid your super. You've got 21 days, whatever it is they tell you to contact and do something. If you don't act on that and your manager says, oh no, we got it under control, don't worry about it, you do have a responsibility, I guess, to make sure you get that under control, because the downside is you are personally responsible at at that
Yeah,
point.
exactly. So it comes back to the nose in, fingers out concept that directors, even if they're passive directors, don't have any real connection with the company. It's a dangerous thing. So as soon as these things happen, you have to jump to action.
Yeah, and jump on it quickly.
Yeah.
The other thing, probably smaller businesses too, that might have a bit of issue, not so much in the bigger businesses, but directors' guarantees. I think that's an area where some of the smaller size businesses probably don't overly think as much about it. But I know there's some small businesses where you might be signing up for a loan or something for the business, and you mightn't think as much of it, but to get that loan, you've got to sign a director's guarantee on it that you're guaranteeing the loan. Well, if your business gets in trouble and it can't pay its debts, and one of those debts is to a bank where you've given a director's guarantee, well, it might be outside the scope of the Corporations Act, but you've signed a guarantee saying that you'll pay that as well. You're pretty much on the hook for that as well. So
yeah, exactly.
There's a few risks there, and there's a few things you need to be aware of. So I think it's really important directors do be mindful of that. Is there anywhere they can go? I know the Australian Institute of Company Directors have a pretty fancy course you can do, but that's thousands of dollars and 2 weeks worth of your time to do it. Are there any sort of other places they can go to find out what their responsibilities are, apart from, as you rightly plugged, talking to us at the Prosperity Advisors? Is there other places they can go to find that info?
ASIC have a lot of information on their website. They've got a little pack that outlines their basic directors' responsibilities.
Yeah.
But I suppose as people get onto larger and larger boards, and you do have that separation between management and the board, you really should be considering taking a course. There's a lot more pressure, especially in the last 10 years, on directors, mainly through the workplace health and safety regime that applies to directors immediately once anything's been notified. So that's a major thing that can cost tens and hundreds of thousands of dollars. So probably the cost of AICD, which is around the sort of $8,000 and probably 4 months of your time. It's definitely a good insurance add-on to make sure you got in your kit bag.
Yeah, because there's all the we're not going into the detail of it, but there's the anti-discrimination stuff. There's environmental policies you can be sort of held accountable for, a lot of those things as well. I think one of them you mentioned when we talked about the notes to this, so the Modern Slavery Act you referenced in there. I'm thinking surely that's not an issue, but I guess it is in a world where you're dealing with other nations, and if those other nations are effectively having slaves, how does that work? Is that's something you can be accountable for?
Yeah. So basically, any Australian company with 100 million turnover or more has to make sure that all their suppliers aren't basically employing slave labour throughout the world. And if they don't do that, they can be found personally liable as well.
So a lot of little intricacies out there. I guess the message is talk to your advisors, talk to your accountants, talk to Prosperity, look at ASIC, look at your responsibilities as a director. Maybe look at doing one of those courses to strengthen your understanding of what is a director and what are your responsibilities. Yeah, even when you're a small business, you're probably going to weigh up the cost. If you're turning over 300,000 compared to 30 million, you're probably going to weigh up the cost of whether you do those courses. But do understand, I guess, that your responsibilities are still there, and you're a director, and that comes with a bit of weight and a bit of something that you are responsible for at the end of the day. It's not just signing a document at the end of the year when the accountant sends it to you.
That's right. If you don't know something, ask a question.
Absolutely.
There's no silly questions, but you look pretty silly if you can't answer them, if you get in trouble with ASIC.
Absolutely. So look, short and sharp, bit of a bland topic and a bit negative, some of it, but that's unfortunately that's the role of the directors. You've got to deal with those things sometimes. So appreciate it, Steve. Thank you very much for joining us today. For everyone out there, really hope you enjoyed the podcast. For more information about Steve, how do they get in contact with you? Email's best?
Email. All the details are up on the Prosperity webpage. LinkedIn's also a good spot to jump on and to do a bit of digging in people's background, including myself.
We'll put that in the notes, but sgagel at prosperity.com.au, and I'm obviously Brendan at bcampbell at prosperity.com.au. For more content and a variety of topics encompassing your financial prosperity, please subscribe to the podcast, like it, share it, get on board, share with others who you think might find this interesting. And follow us to find out more, and go to prosperity.com.au to find out more about prosperity. Thanks, guys. Thanks, Steve.
Talk soon.
Thanks for joining us for today's podcast. Hopefully you liked it, and if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.